Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Over 2 consecutive days, the Australian dollar has remained negative, or more to the point, bearish. After taking out the 60-day moving average, the market has now penetrated the level of 68 cents, following the hawkish US Federal Reserve minutes, which also weighed on the currency. The summary of the Fed's latest policy meeting minutes, which ended on the FEB 1st, revealed that almost all officials backed its decision to raise its interest rates by 1/4 percentage point, while other policymakers wanted to see more proof for easing inflation, as they still believe it's too high and that interest rates need to rise further. A few officials even said that they preferred to raise interest rates by 0.5% or 50 basis points at the latest meeting, which was double the size of what the Fed actually rose. Although high interest rates can help drive down inflation, they also raise the risk of recession because they slow the economy and hurt investment prices. That being said, the annual US consumer inflation came in at 6.4 in January, easing from 6.5% in December, a sharp decline from the 9.1% earlier it was in June last year, which was the largest since November 1981. Keep an eye on this support level. I believe that while the bears weigh on the market, we could be looking down towards the region of 66.5 cents due to the fact that the ADX is trending to the bear case and the rest of the indicators are negative. As the dollar index, which measures the greenback strength against a basket of 6 major currencies, rallied further following the Fed's minutes, we can see that the level of 106.20 was broken and now reveals the next region of 105 as a potential target, with the ADX also bearing a negative outlook. The market is likely to see further weight on the downside, with any advancement likely to see an intraday cap around 106.55. Although the market has been somewhat a slow grind up, it is moving closer to its objective around 135.45 to about 136. We've got an overheated ADX, but nevertheless the technicals are still bullish, and with the support of the US dollar gaining, may actually see a further rise. But keep an eye on 136 because a break there gives little objective, that is to the top side, until 142. A big call, but still the market is relatively firm in terms of the rebound that we've recently seen. The sterling not as bullish as the market may have believed after reversing on Wednesday and now falling back towards the lower side of the range of 120. In light of the pattern, there is the foundation holding around 119.45, and while intact, I believe that we're locked in a range somewhere of 119.45 to 121.55. But the technicals have actually picked up, so I feel any pullback from where we are could be shallow, and I'm not abandoning the topside challenge. I feel that could be actually breached and look towards 122. Gold remains heavy after failing to confirm the hammer. Now looks towards this key level of 1,820. A break there would give further exposure to the downside to 1,786 to 89, which I'm in favour of due to the technicals remaining heavy and the ADX supporting a bear trend. Finishing up with oil, the market crushed the level around 75.40 overnight, and now it reveals the next target around 72.40.60. It is viewed, though, that from this level may actually see a bullish rebound and then eventually look back towards the top side around $77 to $79 a barrel. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report and enjoy the rest of the day.